All right, welcome back to You Heard It from a CFP. My name is Matthew Coyle. Today we're talking about annuities. Do you need an annuity? What are the pros and cons of an annuity, and what's an annuity? Let's dive in. All right, back in the office again. I want to do these outside pretty soon. It needs to get warmer here a little faster, but we press on. So what is an annuity? Let's start there. Basically, an annuity is nothing more than a stream of payments, and you've probably been offered an annuity at some point, especially if you're over the age of 40 like myself. You probably have been offered an annuity, or at least someone's discussed an annuity with you at some point. Particularly the closer you get to the age of retirement, the more these annuity sales presentations tend to come out, and that's okay. But basically what an annuity is a stream of payments. That's all it is. It's a promised stream of payments that can go either for a fixed period of time or an indefinite period of time. So for the purposes of this video, we're only going to cover individual annuities. Okay, now there's all sorts of different types of annuities. There's joint annuities, there's individual annuities, there's annuities that cover you for a fixed or indefinite period of time. We're only going to focus in this video on indefinite annuities for the rest of your life, which is most of them, most of the time, that's what you're going to be getting. And for individuals only, not for joint covered annuities, but just for individuals only. So why would you get an annuity? Well, number one, it's a guarantee, and some people like having guarantees. A lot of people like having guarantees, actually. Obviously, with what the market is doing these days, it's nice to have a portion of your portfolio that you know is guaranteed, that you absolutely know will be there. And of course, that's a very, very comforting thing to have for a lot of folks. And income can make your savings last a lot longer. So one of the purposes of an annuity is to make your savings last longer. You don't have to have all of your savings into an annuity, but what it can do for you is it can lengthen the savings that you do have. So if you have a portfolio of equities or stocks in one account, and cash here, and bonds over here, and real estate over here, having an annuity will free up some of the income need to draw from those other accounts or those other assets. So one of the big things about having an annuity, one of the biggest reasons that people get it is, of course, the guarantee, and that will help you lengthen your savings over time. So having that guarantee, you don't have to pull from the other assets, you don't deplete those as quickly, and you can let those grow or just leave those alone. So the biggest reason people have an annuity, number one, the biggest benefit is the guarantee and the lengthening of your savings. And the next biggest benefit, number two, is the fact that there's no limit. You can put as much money as you want to within an annuity, and it grows tax deferred. So an annuity, in many cases, in most cases, will grow tax deferred until you start taking income from the annuity later, and at that point it becomes taxable income. But in the meantime, unlike an IRA or a 401k or a Roth or 403b or whatever you have, or what other combinations of assets you have, there is no real limit to what you can put into an annuity. Now, if you have an annuity outside of all those accounts and you just want to funnel as much money as you possibly can, and you're a high earner and you just want to put as much money in those guarantees, you can do that. I wouldn't advise you do that if you're a high earner, but if you wanted to, you could put a ton of money into an annuity, and there really is no limit to do so. So as much as an insurance company or any company is willing to sell you, you can deposit and make a deposit into that annuity without ever having to worry about caps or violating IRS limits. That's a really, really nice feature of an annuity. All right, on to the disadvantages, and there are some you need to be aware of if you're shopping for or you are considering an annuity. All these guarantees are certainly not free. Guarantees are very expensive, and when it comes to the world of annuities, annuities are no different in that respect. So what are some of the disadvantages of annuities? Why would you not buy one? Okay, we know why you buy one, right? Guarantees, income for life, part of your portfolio lengthens the rest of it. That makes sense. But from the disadvantage side, what do you need to consider? Well, number one, fees, and lots of them. There are commission charges in annuities. Now, you can buy commission-free annuities. We sell them, but a lot of people don't buy commission-free annuities, unfortunately. So commissions are very high in annuities. There are surrender charges in annuities. There are minimum lockups. There are high annual fees. If you try to pull your money out of an annuity, many of you probably know that you may have trouble doing that without surrendering a portion, maybe anywhere from 2 to 5% of the value of the annuity. So obviously there are lots of fees in these things, and you need to be aware of the fine print and what you might be running into if you try to pull your money out early, which I certainly don't advise. So they are expensive, guarantees are expensive, and you need to be aware of that going forward. So number one disadvantage is fees, and there's lots of them. So number two disadvantage is more specific to where we're at right now in the world and the market in general. When you buy an annuity, you remember what you're doing. You are fixing a period of your income at a certain level. That cannot go up or down. It's great that it can't go down, but it also can't go up. And if we're in an inflationary environment, where the cost of things are basically getting more expensive. Interest rates are going up. We've gone through a period now of 30 or 40 years where rates just basically fell. Rates have not gone up consistently for 30 or 40 years. They are now starting to go up again. When you lock in an annuity, you are basically sending money to an insurance company that will guarantee that rate at a certain percentage for a certain period, most likely indefinitely. And if you're locking in a portion of your income at that rate, you need to be understanding of the fact that you are basically fixing a part of your income in a world and a time now when the cost of things is and are rising. Interest rates are going higher, inflation is a real concern, and I'm not going to try and make a generational call on interest rates, but it seems that the direction of interest rates, generally speaking, is now wanting to go higher. The cost of things are rising, and when you fix a certain portion of your income, a certain percentage of your income into an annuity, you are locking in the purchasing power of every dollar that you do that with, and that dollar is losing purchasing power every time the price of ground beef or gasoline or cleaning products or anything that you buy goes up. So you are losing purchasing power with those dollars every time that annuity sends you a dollar, and it's just buying less and less. So when you purchase something in the annuity area of product, be aware that you are locking in a portion of your dollar long term in an environment that might be a generational turning point when it comes to interest rates and the cost of things rising. They don't go up forever, but certainly an annuity will not protect you from that. There are inflation adjusted annuities, but they're very expensive, and you need to be aware that if you do that, you will run into that risk. Okay, one more item on this and then we will finish this video. So there's a variation on annuity called a variable annuity, which is an annuity that's basically backed up, or the value of that annuity is backed up by variable securities like stocks, bonds, mutual funds, ETFs, indexes, things like that. I run into these a lot, particularly with high earners. I generally don't advise people buy them. If you want an annuity, there's ways to buy an annuity. We can show you how to do it without paying high costs and still getting the benefit of the payments. If you're looking to buy a variable annuity, I would seriously suggest that you reconsider doing that. The variable annuities are very high expense. They are typically, you don't get all the value from the investments that underlie the annuities. You typically don't get your dividends. You don't typically get all the interest. The insurance company keeps that bit. So when you're considering a variable annuity, just remember that there are a number of layers of fees in those products, often 2 to 4 different layers of fees. So should you buy an annuity or should you not buy an annuity? Well, very much so. It depends on your personal situation, how much you value guarantees and how much you're willing to pay for those guarantees. However, I do find that generally speaking, there are some general characteristics of folks that annuities make sense for and general groups that it doesn't. So if you are a higher earner, higher asset investor, so let's say you've made a lot of money over your career and you've been fortunate to save a lot of it, I tend to find the annuities don't work as well for them. They don't make as much sense simply because you just don't need as many of the guarantees, right? You have a higher income to back up some of your spending and or your saving. You have more assets to back up your growth, and you can leave those there. You don't have to worry about taking them out because you have a higher income to begin with. So generally speaking, I don't see a lot of high earners or high asset folks having a need for an annuity. Doesn't mean you can't have one, but I generally see that that's less advantageous for that group. If you haven't saved as much throughout your career, or maybe you've earned a lower income, or maybe you just haven't earned as much, or you had other responsibilities you had to pay for and didn't get a chance to save as much, then generally speaking, an annuity might make sense for you because the guarantee is helpful to lengthen your savings out. Sometimes if you're waiting to take Social Security and there's a gap there and you might need some other income to meet expenses while you're waiting for Social Security, or perhaps maybe you can't dip into your assets as much because you want to lengthen them out, then it might make sense for you to have an annuity. It might make sense to start funding one or annuitize a pension if you have that option. A lot of folks have pension options. They could annuitize if they wanted to, or they can roll them over to an IRA, but in that case it might make sense to annuitize it. So generally speaking, if you haven't had the chance to save as much, an annuity might make sense for you. If you're a higher earner, higher asset person, I tend to find that when I run my numbers, those numbers don't make as much sense for the annuity. So generally speaking, that's what I find, and they are quite expensive, as I mentioned earlier. So do your homework, and if you have a question on it, please feel free to reach out. My information is at the end of the video. And do remember, of course, your most valuable asset is, of course, your time. Take care of yourself, take care of your family, be healthy, and I will talk to you soon. Thanks again. Bye.